If you ignore the real reason for Bitcoin's latest crash, you are flying blind into this bear market. This wasn't just some random market wobble. No, it was triggered by a single sentence from the CEO of Bitcoin's biggest corporate backer, who then pulled a move so unexpected the market is now screaming everything from Ponzi scheme to unstoppable genius. By the end of this, you'll know exactly what happened, why the experts are so divided, and what this high-stakes game means for the path ahead. So, picture this. The market was looking pretty good, and then, boom, a sea of red. Bitcoin just nosedived from around $92,000 all the way down to $84,000. And this happened fast. This was not a slow bleed, this was a straight-up cliff. I mean, we're talking about a nasty 8% drop in a single day. A move like that just vaporizes billions of dollars in value and, of course, leaves everybody scrambling and asking one simple question. What on earth just happened, right? Now, in crypto, there's never just one simple answer. But this time, a huge amount of that fear, that sudden selling pressure, it can be traced back to something one very, very important company said. And that brings us to Strategy, the company you probably know as MicroStrategy. Now, these guys are the single biggest corporate whale in the Bitcoin ocean. So when their leadership talks, the entire market listens. And a recent comment from their CEO didn't just make waves, it was more like a tsunami. Okay, so to really get why everyone freaked out, you gotta know this one metric, MNVA. All it is a simple way to see if their stock price is worth more or less than the actual Bitcoin they hold on their books. The magic number here is 1. If it drops below 1, it means the market thinks the whole company is worth less than its Bitcoin. And there it is. That's the quote that lit the match. For the first time ever, the CEO of Strategy went on record and said that if things got bad enough, as a total loss resort, they would actually consider selling their Bitcoin. And here is the absolutely wild part. They didn't sell anything, not a single coin. It was just the thought, the possibility that the biggest whale in the game might one day start to sell. That alone was enough to send a shockwave of panic through the entire market and trigger this massive sell-off. But then, just as the entire market was bracing for more pain, thinking maybe this was the beginning of the end, Strategy completely flipped the script. They didn't hide. They made a huge, bold move that directly attacked the very fear they had just created. They dropped a bombshell. They announced they were creating a massive war chest, a $1.44 billion reserve, all in US dollars, a totally unexpected strategic play. And the reason for this giant pile of cash was just crystal clear. It's there to pay their bills, to handle their debt, to manage any market craziness. Basically, it's there to do everything possible to make sure they never have to sell their Bitcoin. It was a direct answer to the market's panic. Now, you'd think this would calm everyone down, right? Problem solved? Nope, not even close. This move actually threw gasoline on the fire and kicked off this huge debate about what Strategy is even doing. The question became, is this a brilliant strategy, or is it actually a house of cards? And on one side of that debate, you've got some very loud critics, like Ted Pello, making some really serious accusations. They're literally calling it a Ponzi scheme that's destined to blow up. So let's break this down. The Ponzi argument is that they're just selling new shares in their company to get cash and then using that new cash to pay out old investors, which is, not a sustainable model. But the other side, the Flywheel argument, says no, you're missing the point. They sell shares to buy an asset, Bitcoin, that they believe is going to grow way faster than the cost of that capital, creating this unstoppable loop of buying more and more. And yeah, the supporters like analyst Rajat Soni don't just see it as a good strategy. They see it as a genius, self-perpetuating machine that's designed to do one thing and one thing only, accumulate a ridiculous amount of Bitcoin. Okay, so while all this high-level corporate drama is unfolding, let's get back to the street level. What was the actual damage from that sell-off, and what are people saying about what comes next? Well, the fallout was rough. That sudden price drop caused a cascade of liquidations. We're talking nearly $1 billion in long positions getting completely wiped out. Just gone. A really painful day for a lot of people. So let's just call it what it is. When you have a drop of over 20% from the highs, you are, by definition, in a bear market. The big question on everyone's mind now isn't if it's a bear market, but for how long? Is this a quick dip, or are we settling in for a long winter? But even with all the fear in the air, you've got some heavy hitters telling everyone to just zoom out. You've got guys like Tom Lee from Fundstrat already looking past all this noise, predicting that Bitcoin could be hitting new all-time highs a couple of years down the road, which suggests this could all just be a short-term blip in a much larger story. So what's the big takeaway here? This massive plunge wasn't just some random fluke. It was a fascinating case study in fear, in corporate strategy, and in the power of a good story. It's a huge reminder that in a market like this, maybe the biggest risk isn't just the price going down, it's not understanding the game being played by the people at the very top.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.